introduction to one of my favorite people on earth, Mr. Stephen Oliver, who is with the Advisor Marketing Podcast. Now, Stephen is a true maverick, and I mean that in every sense of the word. Not only in our business, but I have to tell you, his clients universally love him, and they grow at rates that they wouldn't believe it's possible. Now, on this podcast, in each episode, Stephen is joined by various members of his team or special guests to share insider secrets to rapid growth and high net profits in your financial advisory practice. So I just want you to know you're in for a wild ride, new information, and a lot of exciting new future because of Stephen Oliver.
Okay, we are good. So, welcome, David. We had a false start last time, but we will get a full on session here. I think. I'm glad to be talking to you again. We've actually met before now, so that is a wonderful thing. And David, I want to turn it over to you and let you give your full background. You can probably do a little bit better than I can. Then we'll pull it out from there and get into the meat of things.
Yeah, sure, Stephen. It's nice to be with you again. I'm David Marra, and I'm a co-founder of MarraAssets Management, and I run research and portfolio management for the firm. And our clients are other advisors. We're a sub-advisor to advisors. And we have a hedge fund. We have several long-only strategies that are multi-asset, and we have also a long-only equity strategy. And our value proposition, of course, is built around the investment management. But as we've gotten to know RIAs over the years, it's about much more than that. It's about helping RIAs, build their value proposition. So with that as the intro, my own personal background is I did my graduate work in finance at the University of Chicago and graduated in the late 90s. And a few years out of business school, I started an internet search engine startup, which was really my first artificial intelligence startup. It's using machine learning and algorithms to learn from all the data you're getting from users. And obviously Google has pioneered that. When I got into it, it was the real frontier. Search engines was the frontier of the internet. There were a lot of different companies at the time. It's kind of whittled down over time. A few years after that venture, I really started to get thinking about how I could combine my education, my formal education in finance, with compute, data, algorithms. And in 2010, I founded an investment research firm for institutions, building quantitative investment strategies for institutions. And then 3 years ago, coming up on almost 3 years ago now, my partner, Matt Kinzer, and I formed MarraAssets Management to deliver these kind of institutional quality investment strategies to advisors and of course to their clients. So that's a little bit about my background, how I kind of come to finance and portfolio management.
It's off our topic, but I'd love to hear a little bit more about the early internet days. I wrote my first book on internet marketing in 1999, and as you well know, back then it was AltaVista. Yahoo was a directory. Right. The first pay-per-click opportunity was GoTo, which became Overture when Yahoo bought it. And of course, then it became the inspiration for Google's multi-billion-dollar money-making machine. I think they were talking about buying Overture or buying GoTo at one time, and then backed off and just stole the idea and put the pieces together from there. But tell us a little bit about the early days there, if you don't mind. That's fascinating.
Well, it's funny how you go back in time, and there was a lot of uncertainty about what the winning business models would be on the internet. And I can remember before starting the company, I had one primary investor at the beginning, and then it expanded from there. But I remember going to that investor and pitching a half a dozen ideas and sort of ranking them and sort of saying, I think the search engine idea is the bigger one. It's from a business perspective, it's probably got the most appeal and the most longevity. But there was uncertainty. There was so many different models going on out there. Community-based models, what we called community back then. We don't even call it community anymore.
Right, yeah.
It's transformed into social media was another model we kind of considered. In fact, our technology was a hybrid of social media and search engine. But yeah, and the other thing about it was nobody had any skills, right? So I put together an investment team, a management team that was pulling people from, marketing departments, from consumer packaged goods, pulling from technology groups, from media and entertainment companies. I mean, you had to just kind of piece together the skills, because this was an industry that was not established and not even born. It was actually great fun. I enjoyed those years tremendously, even though I got very little sleep.
Yeah. It's amazing how radically things have changed from back then. The marketing tools really haven't changed all that much from a standpoint of how you make a sale to a human being, the psychology of it, but the technology has certainly evolved dramatically. It's funny when I talk about the early days with some of that stuff, to the extent that I was involved with it, which was on the marketing side, is it's like, well, nothing changed and everything changed. With you being able to use video and one thing or another certainly is different, and the search marketing was completely different back then. Much better, the whole page range thing. But let's get into today and get the primary purpose we're here. The term you used, I hadn't heard it before, but basically one of the things that you're doing for financial advisors is outsourced chief investment officer, and you're coming at it from the opposite end that I'm coming at it from. However, the premise is exactly the same. What I'm telling advisors all the time is they're spending way too much time on the technical side of their business, getting way too in the weeds on the back end of their business. They're not doing a very good job of getting themselves out there to the public, specializing, creating a unique advantage that they're going to have. And that's something that you can provide for them is a unique differential for the top end of the market, something that would be appreciated by the mass affluent and the affluent clientele. So let's get right into it and talk about that and how that works for you.
Yeah, sure. So you're absolutely right. We have an outsourced chief investment officer, an OCIO offering, and that's probably about half of our advisors are in that offering, and the other half just use our investment strategies as part of what they do. But for the OCIO offering, we have these multi-strategy four multi-strategy strategies that cover different risk preferences, to cover the multi-asset core, and then we also have a long-only strategy as well for that. So 5 strategies in total for those advisors, plus some more sophisticated SMA strategies for those advisors, as you pointed out, have high net worth clients. And it's through the OCIO offering that we really get involved with advisors in helping them to refine and or craft their value proposition. And that's really why, thank you for inviting me again today. But really, what I wanted to talk about today was, I think and you alluded to it, one of the kind of missed marketing opportunities that many advisors miss is they get kind of lost in, particularly smaller firms where resources are constrained. They get kind of lost in constantly managing the portfolios, which you have to do these days. It's we've been through a lot of cycles in a short period of time. Markets move very fast, narratives change very fast. And you got to keep up with that. But if you just keep up with that, you never grow your business. So how do you grow your business? One way is to offload a portion or all of the investment management to someone like ourselves, but also to and this is what we do, is we work with those clients to make the investment management service not something that's plain Jane anymore, not something that is is a complete commodity, which is what a lot of advisors are offering, but differentiate that service. And it's as you said, the principles of basic marketing haven't changed. If you can craft your value proposition in a differentiated way, if you can have a differentiated way of speaking with potential clients about long-term returns, long-term income, um, net of taxes, for because we do tax management as part of managing these portfolios, um, and uh, and different thematic ways to invest. We have a artificial intelligence thematic investment offering, for example, which doesn't invest in artificial intelligence firms, but invests in the firms which are going to benefit the most from artificial intelligence. So these are kinds of things that advisors can start to build a value proposition around that's differentiated from I'm just using the model portfolios that everybody else uses.
Right.
And our particular expertise is in managing, is protecting capital protection, and minimizing downside size loss. And we've been really happy with the downside loss protection, particularly last year, that we delivered to clients, and our advisors and advisor clients. And so these are elements that an advisor can use. We work with them to strengthen that value proposition that they have. They then often find they're not spending as much time as they used to on these activities, and they spend much more time, um, gathering assets, or just spending time with clients to reduce turnover where they have problem clients, things of that nature.
Yeah.
And so, and we really have seen those OCIO clients that we're working with, advisors we're working with, their business they just start rocking on the marketing side. And and we can go into it more, but as you and I discussed earlier, marketing's not easy these days. I mean, digital marketing is complex, it's constantly changing. And it's just like any other skill, you got to keep on top of it. And that's what brings in the new revenue.
You bet.
So that combined with new people coming in with a differentiated value proposition, so you can get a higher percentage of people who find you appealing. I think that's a winning formula.
Yeah. David, if you were to look into the future, put your you've been on kind of leading edge of several of these things. How do you see the future unfolding for the average financial advisor? I have a pretty strong opinion on that, but what do you see in the next 5-7 years?
I see increased specialization. Mm-hmm. So we see that across the investment industry, broadly speaking, like in all institutional, non-institutional, and specialization is just a long-term trend that's been around for since the start of the Industrial Revolution, really, but it continues, right? So specialization means you need to decide what you do, and you do really well. Yeah. And that means you do really well in a competitive sense. You do it better than most other people you compete against. Mm-hmm. And then focus on that as your core skill, and try to outsource other things that are going to be time consuming, complex, constantly changing, and just going to be distractions to allowing you to build on that thing you do really well. So just to give like some concrete examples, I call them the empire builders. Mm-hmm. Right? The empire builders really get the specialization discussion, because they are like, I'm going to specialize in customer service and asset gathering. That's all the marketing and sales elements that you know much better than I do, Stephen. And that becomes their scalable model, right? They've got somebody, or in some cases it might be multiple OCIOs. Sometimes there are 2 OCIOs for a firm, but it's usually 1, but particularly for smaller firms, but it can be a little more complex. But they've got somebody whose my full-time job every day is to take care of assets, is to protect capital and to compound wealth. That's all I think about. And I'm not distracted from that. Them having me as a partner then allows them to go off and focus on, how do I get the word out about what my firm is doing, how great I am at customer service, how great I am at putting together a package of investments that will deliver the income targets that we're looking for, that will deliver the compounding wealth targets that we're looking for, and have those discussions and keep up with clients. It's specialization, and the advisors who specialize more, they find that sweet spot for them, the thing they're best at, and they really run with that. I see those as the empire builders.
Yeah, and I couldn't agree more. And maybe phrase it differently sometimes, but I think the future is bleak for people who try to be generalists, and the future is bleak for people who don't differentiate themselves to their market. And so we focus on niche marketing, being the absolute best for dentists or MDs or neurosurgeons, or pick a category, but also to really be good at client communication, at client outreach. And the more I talk about that, the more I get advisors who are just overwhelmed. They've got they spend the majority of the time on the back end of their business and very little on the front end of their business, which is what you free up time for them to do and help them specialize. The other thing that I see is it feels like the bottom, whatever percentage it is, but the bottom piece of the market is really being replaced by, if you want to call it AI or robo investment, one thing or another. There's the people at the top end of the market are never going to just go on a website and do the stuff themselves. But at the bottom end of the market, the purpose or the rationale for having an advisor who's no better than anybody else, who doesn't distinguish themselves, who doesn't specialize, is going away quickly. It certainly seems a threat of AI for the financial advisory business is from the bottom half of the market, not the top half of the market.
Yeah, that's right, and that's absolutely right. And when you play that forward, when you're looking at younger people who are just doing the robo investing or something like that, when they get wealthy, they won't be doing that anymore, right? They're going to have complex tax situations. They're going to have families that they're investing for, so multiple entities. They're going to have businesses of their own if they're entrepreneurs. And then those people, and there's a lot of these people, because anybody over, say, 2 or 3 million really starts to think like this. And there's just a lot of people like that these days, where they're talking about 2 or 3 million investable assets. They start to ask a question of show me something, Mr. or Mrs. Advisor, that is a unique investment opportunity, right? Show me some things that are unique. And that's where this differentiation, having well thought that out and being able to play and offer that uniqueness. It could be tax efficiency uniqueness. It could be income uniqueness. It could be just growing and compounding uniqueness. It could be different types of risks that you allow them to take. I mean, you should think about something like we don't do private markets, but just as an example, like I said, we have the hedge fund, but that's an alternatives. But other alternatives are private equity, private credit, things of this nature, right? The more sophisticated advisors may not play in all of those spaces, but they may play in some of those spaces, and then they have something unique to offer those higher net worth clients who just want to, get compensation for illiquidity if it's private equity, for example, or in the case of a hedge fund, get compensation for putting on some leverage and shorting here and there, right? So people look for different ways to get access to different betas and potentially get access to more alpha through different varieties of things.
Yeah, the advisors where you're outsourcing the investment side of it for it, how does the working relationship look? How does if you really get down to brass tacks, within their office, how does it look on a day-by-day basis? How does it help support their clients, and how do they feel comfortable with everything going on?
So a lot of it, I've talked about it so far in terms of the investment management, but there's a whole other piece, which is my partner's side of the business. He handles, operation and client onboarding and all that stuff for our firm. So that's his team. And his team on a day-to-day basis is exactly what you're asking about, Stephen.
Yeah.
So all of this work of, a client needs to raise cash, right? This comes up every month for advisors, right? We take care of that for them. That's massive. That's a massive workload that's off their hands, and we don't charge extra for that. That just is part of the management fees. We don't charge any fee for that. Right. So that's you're offloading a cost center that you've got to have ability to do that with. These activities come up daily almost for an advisor. You offload that to someone else. So that cash management, onboarding new clients, we get involved with that, and that looks different depending on what the advisor has set up. Sometimes we're very light in terms of just getting the strategy going, or sometimes it's a little heavier touch for other firms that need a little bit more help. But there's usually some offload of work there for new clients as well. So that operational side is another big thing that just all of a sudden the whole asset management side of the business, from cash raises to the money management, starts to become less burdensome for them.
Yeah. Well, and one of the things that I see, and I don't know if you share the opinion, but it certainly seems like just the psychology of the business, the psychology of the niche is most advisors are not very good at supervising, hiring, training, and managing a big team of people underneath them. It tends to be of people who come into this niche are either on the investment side and very nerdy on that end, or they're on the sales and people side. And if you're on the sales and people side, it seems that just the skill set, I mean, it's something we teach advisors, how to develop a team, how to really delegate, not abdicate. But it seems like that's just not a skill set that the most even, 7-figure advisors are very good at naturally.
Yeah, I think you're right. I think, usually most advisory firms get started with 1, 2, maybe 3 partners,
Mhm.
and they grow from there. And the original value proposition is a default of what those 3 people sort of brought together, right? And
Right.
and like you said, they could be very lopsided. They were all investment management, or they were all in some operational side of things, or who knows. Um, but as you grow and you want to have a scalable way to grow, right? A scalable way means you have a machine, an engine, a down pat set of processes that work to bring in new clients, to communicate with them regularly, to keep updated on their preferences and their changes in lifestyles, so you can deliver good.
It's Lee Milt here, and I'm delighted to interrupt you today and let you know that I've been working with Stephen Oliver for 10 or 15 years now. He's a great guy. I love all the research that he does. And I just wanted to let you know that if you're enjoying the content on this podcast, then you really want to make time to visit advisorwealthmastery.com. And why should you do that? Well, because you're going to receive 2 of his great books, and actually one of mine called Success is an Inside Job. You'll also get a lot of absolutely free material on growing your practice through effective marketing. So again, take the time to go to advisorwealthmastery.com.
Customer service, and then manage the assets, right? These are the 3 basic things. And you start to look at that more scientifically as you grow and say, hey, we need to have if we're going to continue to grow and not just get that initial low-hanging fruit that you got, we've got to start to specialize in these 3, and we can't do all 3 given the people we are. So let's start to outsource pieces of this to people who have that. Just like marketing, even if you're in charge of your marketing, you're going to be still outsourcing some components of that marketing to experts, right? You may outsource something to a LinkedIn expert, or to a Google expert, or to a Facebook expert, right? So, and all these things require thought and that kind of thing. So, yeah. That's exactly how I think that's the genesis. You start off, you get going, you get some initial success, but then you need to take a more scientific and hard-nosed look at it to build a model that will continue to scale without killing you.
You bet. Yeah, and certainly, I mean, although we're teaching and developing all the marketing skills and the sales skills to bring in highly qualified new clients, we very oftentimes plug people in with an agency that we work with that does LinkedIn and Facebook advertising, a different agency that does website development, SEO, and so forth, another one that does pay-per-click, etc. Because again, your time should be worth $1,000 an hour. If you're doing $100 an hour activities, you shouldn't be doing that. And on the other hand, is you can't master everything. And so you're much better off to find somebody who's accomplished that. I think that's the real genius of what you're doing, is having somebody on the back end who can really focus in and create the differential opportunity for mastering certain areas of the investing, and then bring that forward into being a differentiator for the person who has 10 million to invest, or 5 million to invest, or 15 million, because the average guy isn't going to.
And I'll give you a concrete example. It actually came up today. Spoke with one of our very good advisors, and he said he turned to my partner Matt. We're on having our regular monthly call, and he says, "I got 25 new accounts for you, Matt.
Mm-hmm.
Here's a spreadsheet, go. And Matt will have that all invested within 24 hours.
Fantastic.
And all the advisor had to do was send the spreadsheet over. Here's the names. We have the account numbers, and we're good to go. And here's the amounts I want you to invest in each person for each strategy.
Yeah.
That's if you think about that as a capability for an RIA, growth starts to become frictionless.
You bet. You bet.
Because I've had other advisors, again, real examples, where they have literally stopped advertising because they don't have the throughput to onboard people.
Yeah.
Right? They can only onboard a small number of people per month because the process is so cumbersome and the technology stack is not that great, and not all of that's been worked out. And to be able to just have a spreadsheet, send it over, 25 accounts, 24 hours later, it's all invested. I mean, it helps in the focus.
Yeah. After we had our problem-laden first attempt at doing this recording, I actually had a client conversation exactly with what you just described. Is he had stopped doing all of his marketing to fix his back end, and he didn't get a very polite conversation from me, to tell you the truth. I said, you know how much effort there is in getting everything going again? Do you know how much momentum you lose? I basically said, you never stop the marketing. You just have to fix that in a hurry. But it is amazing how people think that way. They once you back off on building your brand, once you back off on building your pipeline, building your prospect base because of fixing your administrative problems, there's momentum is a real thing. Once you've got the momentum going, you got the pieces in place and everything else, you never want to pull the plug on that or even tighten it down. The hard part is getting it going to begin with. I've seen that conversation a couple of times. I more often encounter it is that we break their sales process. So, we take somebody who's used to onboarding 3 or 4 new clients a month. One of my top guys, I created, I think it was 42 new quality prospects for him in a month, which was more than he had in the previous year, and everything broke. Their follow-up went to hell. They didn't even get meetings scheduled with people. The back end stuff broke. It was obvious that the delegation was more abdication, handing it off to people who didn't do anything. But it's so important to have that ability to scale, and then never stop the front end in order to accommodate the back end.
Yeah, I mean, as you're pointing out, distraction is the death knell, right? If you're flitting every day from this activity to that activity to the next activity to this activity, and I've seen it. Those firms that are trapped there, and it's an easy trap to fall into. It's I empathize and sympathize with people who are in that, because when you start a firm, that is sort of, you have to do it that way. You're just getting started. But once you grow a little bit, that's when you need to switch up the gears and embrace this specialization, figure out your true value added. And when you do, you can then start to scalably grow. And I've seen this transition now over the last 3 years that we've been doing this. I've seen it happen, and it's amazing. Literally within a month or two, people start coming up with marketing ideas that just wouldn't have been there. In fact, we help some of that, like you're doing. We're definitely familiar with people who know social media really well for in the RIA space, and we introduce our advisors to them and say, hey, because there's a little bit of cross filtering, right? We learn something
Sure.
from an advisor, and in another part of the country, we have another advisor and say, hey, this is really working for these guys on LinkedIn. Why don't you try it, right? We want to be a partner in our advisors' success.
Yeah. Let's go to that. If you were to look at your current advisors, and I'm sure they skew top 10% or 15% of the industry at the very least, but what are some commonalities of why they're being as successful as they're being, and what the ones who are giving you the most clientele to work with? What are some of the commonalities you're seeing?
I think one commonality is, at least one commonality in terms of with us, and it generalizes, is they like our investment philosophy because they already had that same investment philosophy, right? Certainly with any partner you work with, it would go, I think, the same for marketing. Certain companies want to be perceived in a certain way, and they need to find a marketing partner who says, yeah, I have experience marketing to that audience in that way. I'm not going to violate your marketing values, so to speak, your values as a firm. I can fit it. It's the same thing with the investment management side. You want that the investment philosophy meets their investment philosophy so that the communication to their existing clients isn't a sharp departure. So that's one thing. So alignment in terms of the investment management philosophy is one. And that generalizes to all the partners that you work with, anything you've deciding to outsource and is not going to be your specialization, but you're going to outsource it. You need to find that philosophical alignment with that partner. And I think having discussions with potential partners about how, not just like, yeah, they're capable, they can do these activities, but do they kind of share my pace? Right. I used to tell, I have some young nieces and nephews, and I used to tell them there's two kinds of people in the world: people who have urgency and people who don't.
Right.
Usually if you're an empire builder, you have urgency. You need to find partners who share that urgency with you, right? They understand you're under pressure to perform and grow and capture clients, and they're willing to go the extra mile to help you achieve that. Things of this nature. Yeah. So have good philosophical alignment, then make sure that the skills check the box. Those are two, good starting places for finding good partners, I think.
You bet. And talk a little bit about your investment philosophy. Then, what specifically have you been looking at for your clients, and how has that been working?
So we believe that the best way to compound wealth and provide income is to avoid large losses.
Yeah, not
small losses, but avoid large losses. Yeah. And like I said, we were very happy with what we did there, particularly last year on the downside. But I've been managing these portfolios for a long time versus model portfolios, and now with Markin, and since January 2017, I think. And we have we're a quantitative-based investor, so it's heavily compute-based, it's heavily systematic, and we have a history of being able to perform well on the downside, outperform, benchmarks on the downside, and do very well there. And that's our value proposition. You're going to compound wealth better by avoiding large drawdowns. As an advisor, that has some additional benefits, when that manifests itself, which is you get fewer complaints.
You bet.
Right. If the market is down 20 and you're down 10 or 11, those two different advisors are dealing with a vastly different set of clients in terms of their satisfaction and happiness. So being able to provide a smoother path in retirement through income without worrying about large left tail risks, and the same thing for compounding wealth. It's a better long-term way to compound wealth. I mean, I think the Warren Buffett quote, if I remember correctly, is I think Warren Buffett literally said the best way to compound wealth is to avoid large losses.
Yeah.
And we do that. We deliver that systematically and through quantitative modeling. But that's the basic investment philosophy.
Yeah. You made a reference before, and it's not terribly relevant to the conversation, but it might be interesting. What do you see the investment opportunities being tied into AI, the industries that are going to benefit, industries that are going to suffer?
So I'll look at it at the company level, because it's even more interesting at the company level. So the generative artificial intelligence, again, my background is artificial intelligence. I've been doing this stuff now for 20 years. Yeah. And Stephen, up until 5 years ago, it was very difficult because nobody thought it could be done, right?
You bet.
Being a pioneer is not always easy. But anyway, the market's here now and gets it.
With arrows in your back.
Right, you can.
Quote, yeah.
Right. But in terms of companies, there's a huge opportunity. So there are just certain companies which structurally lend themselves in terms of their businesses to generative AI, right? Generative AI is a technology. It doesn't build houses, for example. You still need builders. It doesn't clean floors. You still need janitors, right? It doesn't do plumbing for you. You still need plumbers, right? There's no physical activity associated with really machines and AI haven't been linked yet. That's sort of coming. Where this state of the technology is at is it can help knowledge workers become all kinds of knowledge workers are become very, very productive, right? Higher productivity manifests itself in two ways in terms of earnings. One, you either get bigger margins and higher growth, or you can use fewer people to just do the same things and you can cut your costs, right? So that's the margin piece. So you can get more sales or you can cut your costs. Either way, you're delivering more margin, right? More earnings. So we've done the looked for companies that are ideally positioned to be able to benefit from this generation across industry. So, if you think about if you missed the NVIDIA wave, if you missed the Microsoft and the Google wave that we just had a few months ago, a lot of that future growth from AI is already priced into those 7 or 12 firms. Where's it going to come from next? It's going to come from the firms across the industries that can use this technology to drive their earnings vis-a-vis margins, sales growth, productivity. So that's what we've done. We put together an investment strategy that has these 50 firms in it that are best positioned to use this to drive it. And those firms are I can tell you, they're investing crazy amounts in CapEx to bring these technologies to their investment processes.
Yeah. It certainly seems, having paid attention to this for an awful long time, as well, the promise of higher worker productivity through automation was really slow in coming, right? So if you go back to, people thought in the 60s when the IBM 360 and then when the PC revolution in the late 70s, early 80s, that it was going to have a dramatic impact on productivity. My sense is we're at a hockey curve point on that productivity curve where, any discounting of the productivity impacts that it's had, slowly in the past are going to go out the window as you just hit that hockey stick deal. Is that your sense of it?
Oh yeah, I think you're 100% right on it, Stephen. So, I just wrote a blog post. You can visit our website to see, my writings on this, markinfunds.com, MarkinFunds.com, and then go to the insights link or there. But there were some economists at the National Bureau of Economic Research. So these are straight up traditional economists, and they recently came out with a paper. And they looked at what the potential growth rates are for the economy, broad GDP growth rates for the economy. They reached the conclusion that if you look at, they looked at roughly 25 standard economic models, and then they applied AI technology to them, and they said, okay, how do the growth rates changed? In a dozen of the models, nearly a dozen of the models, growth rate ticked up dramatically. In another 10 or so of the models, they called it explosive growth.
Right.
In only 5 of the models, there was not much effect.
Right.
So you think of that as a probability, that's like an 80% chance this is having a very big effect on growth. In fact, I think the story is as simple as this. We have good data as economists going back to 1500 in terms of GDP, global GDP back to about 1500. Yeah. You go from 1500 to 1842, 1847, when you mark the start of the Industrial Revolution, the growth rate's pretty similar through all of those years.
Oh, yeah.
You get then to the Industrial Revolution and growth just takes off. And I think there's a high probability chance that where we're sitting today is 1847 all over again.
Yeah.
That it's going to propel us onto a new, higher level of growth than the Industrial Revolution did. So we're looking at the next hockey stick, I think. That's my sense of it. And I've been in this 20 years, and it really resonated with me a moment ago when you were saying, you go back to the history of this technology 10 years ago. I was in, the Boston Consulting Group, advising, all kinds of firms on how to implement these technologies. It was really hard.
Yeah.
It was really hard to build machine learning models and gather all the data and then figure out how to apply it and keep the models updated and find a part of the business that could benefit from it. It was very hard. And why I'm so bullish, if you will, on AI as a technology in terms of its ability to affect earnings and growth is because I see how easy it is to implement. And we use it here at Mark, and we're using these technologies to implement generative AI. It's just so much easier to build a business case around it and have the payoff be a very short period of time. That's why I think we potentially at 1847 all over again.
Yeah, I couldn't agree more. The thing that I think is a real possibility is that most of the advisors in the industry kind of get left out of the revolution going on.
It's Lee Milt here, and I'm delighted to interrupt you today and let you know that I've been working with Stephen Oliver for 10 or 15 years now. He's a great guy. I love all the research that he does. And I just wanted to let you know that if you're enjoying the content on this podcast, then you really want to make time to visit advisorwealthmastery.com. And why should you do that? Well, because you're going to receive 2 of his great books and actually one of mine called Success is an Inside Job. You'll also get a lot of absolutely free material on growing your practice through effective marketing. So again, take the time to go to advisorwealthmastery.com.
It's really, if you've been doing, let's say it this way, if you've been doing this for 20 years and you have a set of presuppositions, you have a set of paradigms that you're operating, the way you're looking at client acquisition, the way you're looking at who your clients are, and the way you're looking at how the market unfolds, I think all of those pillars are gonna be completely re-engineered and have to be developed over the next 5 years. In just about every way you can look at it, I think there's going to be a dramatic shift.
And this goes back to our earlier discussion about specialization. This all argues for more specialization. The winnings are coming the winnings in the future are coming to those who specialize even more. Because if you think about a technology shift, right? You're not going to bring all this technology in-house, right? You're going to be a manager of outsourcing different pieces of this value chain to people who have specialization. We use this technology on the investment management side, but it's certainly being embraced to a very high degree on the marketing and sales side, right? So, if you think about how you want to build your investment advisory firm, and actually we had an advisor recently who was literally talking with us about this. Like, we really want to get on the AI, the Moore's Law path. Moore's Law path is cut my costs in half every 2 years, right? Or double my capability every 2 years, whichever way you want to think about it, some combination thereof. If you want to get, as an advisory firm, if you want to get on the Moore's Law growth path, that's a technology-based growth path. You're going to have to reimagine your business, and the reimagining is going to come around what we're both alluding to here, which is really thinking of myself as the person who just knits together this very specialized group of people who are using these technologies in a new way. And I want to knit together the best person in sales, in marketing, in CRM, in investment management. I knit this whole thing together, and now I've really built. Even a small firm could potentially build a very scalable advisory model.
You bet. Yeah, on the marketing side, I was having this conversation. It all runs together. I think it was yesterday, and it was basically the marketing person in the organization who was just getting overwhelmed. But everything he was doing was all built on manual processes. Literally, if he had a quality client, he was pulling out an envelope and putting a package together. And the conversation we were having is, well, you get rid of everything you get rid of, you automate everything you can automate, and you outsource everything you can outsource. And 95% of what he was doing fit into one of those 3 categories. Either doing things that were, that was the old re-engineering revolution years ago, was, completely re-envisioning everything you're doing. But it is important for the advisors to take I always think about it as go to Starbucks with a fresh legal pad and draft out your business fresh every time. But is sit down and figure out the ways that it's not going to all revolve around you, and then make sure that you as the individual are doing the high value thing, which is the human communication. not getting bogged down in the back office and not getting down in things that can be automated or outsourced.
Yeah, yeah, I think so. I think I've seen that with very large asset management firms that I worked with when I was in management consulting, and we were helping them to, I was helping them, basically CEOs to improve their strategy right along these lines. And now, the past 5, 6 years working with advisors doing the same thing on a smaller scale. And, it takes some effort. We can help our advisors with certain pieces of that, but you can really start to put together very nice value propositions without a huge amount of work, because there are people like yourself, like me, others out there that can really help people to have a lot of knowledge and can bring that specialization that's needed, and then the advisor can run with it.
You bet. You bet. Well, we're going to run up against the clock here pretty quickly. What if somebody wants to reach out to you and find out more about what you do? How would they do that, David?
So we're at markinfunds.com. So MarkinFunds.com. The name of the firm is Markin Asset Management. You can just Google us. But we're setting up a web page for your listeners, a landing page for them. So have some resources there for them that touches on the things you and I talked about today. And give them an opportunity to learn about our firm and reach out to us. We'd love to chat with your advisors. And so that's markinfunds.com/FAMP. FAMP, all lowercase.
Yeah. So there'll be some great free resources there, and they can learn a little bit more about you. If you were going to give 3 or 4 pieces of advice for an advisor who really wants to double or triple in the next few years, what would be? I mean, it's a big question, but where would you point them in the right direction?
I mean, what comes to mind right now as I'm trying to think, we've said a couple of things, right? To summarize, we said, work on your value proposition. One way of saying that is when I went to business school, I remember the first day of business school, the dean said to us, the next 2 years is your opportunity to look yourself in the mirror and figure out what your talents are, what you're good at, what you have passion for, and what you're not good at, right? The world is a competitive place, and that's the starting point. Figure out what is your core competence, what you want to build on, what you're really, really competitively speaking good at. Build your value proposition around that. And then look for first alignment, philosophical alignment, and potential partners you need in other parts of your business, and use that as the guiding light to find the best people to work with. And I would also say keep an open mind. Your business as an advisor is going to change. Your business, your second year is going to be different than your first year. Your third year is going to be different than your second year. Your fifth year is going to be different than all those years, right? As you grow your business, it's going to change. 10 million of AUM, 30 million of AUM, and 60 million of AUM are actually very different businesses, if they're all growth oriented. So keep an open mind that the business is going to change, and your skills and capabilities and focus need to sort of roll with it.
Yeah, you've always got to be learning and developing new skills. Always got to be completely adapting to the market. I might paraphrase what you said: is the only constant is change. So you've never figured out your business. You're constantly learning all the aspects of your business over and over and over again.
Right. And I lived in Japan for a long time, and one thing I learned in Japan was Japan is there are many Buddhists in Japan, and Buddhism. The central theme of Buddhism is the only constant is change. So there are certain people who are very, very comfortable with that, as in their lives. It doesn't come naturally to us as human beings, but I think it's to the extent that you can embrace that and recognize that your business is going to evolve through time, and you need to structure the business so it's the right business for that size and other factors. It'll keep you grounded.
Yeah, and maybe add to that: be careful what you wish for; you might get it. Make sure you picture where you wanted to go before you end up wherever you are at. Well, David, on that note, it's been great. I really appreciate you brought some great value to all of our listeners. We'll remind them that was Markin Funds / Financial Advisor Marketing Podcast, FAMP.
Markinfunds.com / FAMP.
Correct.
Right.
Correct.
Right.
So hopefully they'll grab that information. We'll have it in the show notes and everywhere else as well.
All right, great. And Stephen, as usual, it's great to be with you again.
Yeah, and I'm glad all of our technology worked this time.
Fantastic.
Thank you.